What is up, guys? Welcome back to the Capitalist Investor YouTube channel, back with another video. Today's video is a midweek markets episode 1 from a new series that I'm bringing to the channel. In this series I'll be helping you to find out what's been going on in the investing markets each week. It's been a crazy week in the financial markets this week. Over the past few weeks we have seen the market hovering around key resistance levels, for example the S&P 500 and the 3000 level, which if the market was to break this key level, the expectation was to be that we were going to return to a bull market and the bear market would be less likely. This was an important number, mainly due to it being the 200-day moving average. Back end of May we had seen the market try to break this threshold and in most instances be pulled back and not quite breaching this level. What we saw during the beginning of June is the market has accepted and allowed the market to close above this key level. The S&P 500 post this has continued to push on, breaking a further 100 to the levels of 3,100, which is quite crazy. This would look to support a sustainable upwards trend for the market. Looking at my portfolio, I can see that a lot of stocks are returning to the levels pre-COVID crash, which is great to see, and I'm sure many of you investors on here are also feeling the benefit of green when reviewing your own portfolios. When looking at the VIX index, which is a measure of the market's expected volatility based on S&P 500 index, sometimes referred to as the scare chart, we can see that it has returned to around 25. The scale for the VIX, who don't know, is 0 to 100. 0 being a very optimistic market looking for purchasing as many stocks as possible and representing a bull market, and higher numbers representing a bear market around the 80 to 100 threshold. We can see that it's returned to around 25 from a high during the middle of March of 80. It should be mentioned, however, that 25 is still above the level seen pre-crash, and there is still skeptics out there who believe there is too big a disconnect between the actual financial impact on the economy and the financial markets. It seems the market is focused on liquidity, and particularly if you've been focusing on the news of recent, the funding that has been provided by the American Central Bank. Some significant bond buying from this reserve. This has had a net impact that bond markets seem to have stabilised, which may indicate a bottom of the market has come and gone, although no one indicator can tell us this. One other indicator would be looking at what stocks are rallying. Typically during pandemics we have seen tech stocks and safe stocks rally. What we would need to see to help confirm a bull market would be the rest of the market beginning to rally, not just the tech stocks propping up this listing. So what about the FTSE 100 this week? Well, the FTSE 100 has moved from 6077 level to 6341 at the time of making this video. A huge increase, however, still a while to go before the levels of 6,800 pre-COVID. If we talk through some specific company information, we can see that EasyJet was ejected from the UK's list of top companies along with Carnival Cruises, a stock which I currently own. However, we can see from this that actually the impact of this over the past week has been pretty minimal, with a effectively 0% or 0.3% increase over the week. They have, however, and I can't speak for EasyJet in terms of value, lost their place in the FTSE 100, and this is mainly due to the COVID-19 impact on their share price. In particular for EasyJet, I can mention that airlines have lost around 2/3 of their value this year, and despite some recovery, they are still well below its moving average. So these have dropped out of the FTSE 100, and that obviously means there's space for new companies to join the FTSE 100. The main one that I'd like to talk about is GVC, which is a gambling firm which many of you may know inadvertently as they own Ladbrokes and Boyne. This does surprise me somewhat due to limited live sports being aired. However, I think it represents the changing consumer spend with people still gambling, whether that be on fruit machines instead of live sports. And actually what we can see is they represent a 1.3% movement increase over the week, although we can see some decrease beginning part of the week, and actually it pushed really on from that point and rallied upwards, which will probably be due to some of this positive news around moving into the FTSE 100. Some further positive news for you McDonald's stockholders is that they've opened 900 drive-thrus in the UK this week. And from looking at my social media, there has been crazy queues for people wanting to get their McDonald's fix. With some people queuing for up to 2 hours just to get their McDonald's fix. Not me personally, but a great if you're a McDonald's stockholder and can see that finally the business is starting to bring some more money in. In other news, more than a quarter of the UK workers have now been furloughed, with some 8.7 million workers furloughed since April. House prices have seen the largest fall for 11 years. If I bring up Bellway Homes, for 11 years, falling by 1.7% in May as the coronavirus crisis hit market activity. For those of you investing looking to get involved in property, this might sound great news. However, I do feel this could be the start of declining prices. It does not seem to have an impact on the Bellway stock price through the week, which has actually rallied 5.8% through the week. So actually a minimal impact on these. But I think this is more generally for you and I in terms of house prices if you were to start investing in property. I can't help but thinking, looking at news articles, that the intelligent investor is still not thinking we are in a bullish market. Most news articles point towards a negative around the market, with job losses and the economy not fully open. Further drops in the market could just be around the corner. But before we wrap up today's video on midweek markets, I will just run through the main markets and their current levels. The FTSE 100, as mentioned before, is around the 6,300 level. The FTSE 250 is around 17,826. DAX at 12,430. Dow Jones at 26,271. Nasdaq 9644. S&P 500 at 3114. Looking at currencies, the euro against the pound is currently at €1.11 to the pound. US dollar is $1.26 to the pound, and Japanese yen is 137.4 to the pound. Looking at oil, crude oil is at around $30 a barrel, and gold has slightly decreased to around the $1,700 mark. I hope you've enjoyed my new midweek series, episode 1. Be sure to let me know what you think in the comments below. If you're new to the channel, be sure to hit the subscribe button to get next week's episode delivered straight to your inbox, along with other finance episodes that I upload. If you have found this episode interesting and valuable, please do hit the like button to support my channel and this series. Until next time guys, peace!